welcome to the daily insights that matter. Now, after 2 months of aggressive sales in the months of October and November, December saw an overall decline in automobile sales by about 5% year on year. Let's look at this as we talk about the auto sales numbers for December 2022. While all other segments in the auto industry were in green, the decline was majorly caused by the drag in the two-wheeler segment, which fell by approximately 11%. Three-wheelers, passenger vehicles, tractors and commercial vehicles on the other hand showed a growth of about 42%, 8%, 5% and 11% respectively during the same period. Now, compared to the pre-COVID month of December 19, total auto retails were down by approximately 12%. Again, it is the two-wheeler segment which has pulled down the sales as it has fallen by 21%. All the other categories like three-wheelers, passenger vehicles, tractors and commercial vehicles showed growth of 4%, 21%, 27% and 9% respectively. For the calendar year 2022, total vehicle sales grew by 15% as compared to the last year and 17% as compared to the calendar year 2020. But it has failed to surpass the calendar year 19 sales, which was the pre-COVID year, and has registered a fall of 10% compared to the calendar year 2019 sales. Now, the auto sales numbers are keenly watched as they are one of the key indicators to assess private consumption and carry more than 50% weightage in calculating the country's economic growth. The two-wheeler segment has been declining due to the rising inflation, increased cost of ownership, delayed pickup in rural demand, and the increase in the EV sales, which are cannibalizing into the traditional internal combustion engine two-wheeler sales as well. Having said that, global geopolitical headwinds, tightening monetary policy and the lingering effect of the pandemic has combined to create a gloomy global outlook. Now, the RBI has also increased the repo rate by 225 basis points since May 2022, which has directly impacted the auto loans, making them more expensive for the customers. Going forward, the government has asked the automakers to comply with stricter fuel efficiency norms as part of the second phase of the BS6 norms, which is coming into effect from April 2023, which is aimed at reducing the carbon emissions. Now, this would also trigger a further price hikes across all the categories. And the two-wheeler segment demand will be contingent on the pickup in the rural economy and the export demand. However, the two-wheeler EVs will witness growth in the coming quarters due to the gaining traction from the urban and semi-urban consumers. Now, for the automotive sector to fully rise above the pre-COVID levels, the two-wheeler segment needs to perform better. With India's startup ecosystem maturing since the last decade, the time taken by new age tech companies to reach a $100 million revenue mark has reduced significantly. Now, according to a recent report by tech and data-driven consultancy firm Redseer, the average time taken by startups to scale to $100 million revenue has come down to just 5 years from 2017 to 2022 from the initial period of 18 years which it used to take from 2000 to 2018. Now, there are about 100 unicorns and about 170 soonicorns in India. Of these 270 startups, 40 plus unicorns and soonicorns operating in sectors such as fintech, e-commerce and logistics have all crossed the $100 million revenue milestone as of FY 2022, taking 5 to 12 years to get there. Now, the unicorns are the startups that are valued at over $1 billion, while startups that are soon to become a unicorn are known as soonicorns and they are valued above $500 million. Now, most startups face scaling challenges in their growth journey as many belong to niche industries which restrict their total addressable market, while many others need help with the right product market fit and to battle unsustainable growth. Now, the startup ecosystem has produced more than 100 companies with revenues greater than 100 million so far. Now, investors, particularly venture capitalists, have played a crucial role in assisting firms to scale their revenues from $0 to $100 million. VCs have invested about $143 billion over the last 15 years in the startup ecosystem, which is currently valued at $804 billion. Besides providing funds, investors add tremendous value to the startup as these companies are benefited greatly by the knowledge of governance, financial prudence, and networks bought by the VCs. Industry experts assist companies rise to targeted heights and overcome their difficulties with customized solutions for total addressable market expansion, to understanding the right product market fit, to increase profitability, and also to bring in the operational efficiency. So what does all of this news mean for you? Now, due to inflationary pressures, upcoming change in fuel efficiency norms resulting in price hikes, Q4 could be another quarter where we may witness uneven growth in the automobile sector. This will therefore have an indirect neutral impact on you for time being. Now, with the growing revenue and earnings, startups are acting as major catalysts to stimulate economic growth while attracting foreign investments and creating more jobs. Hence, it is safe to say that the startup culture is thriving and India is now in the age of tech as the third largest startup ecosystem in the world. Therefore, this will have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.